Hello and welcome back to the channel. In this edition, we'll be reviewing some of the holdings that Massachusetts Institute of Technology has gotten into. So it has various shareholdings within India. It has a massive fund, a fund close to 2 lakh crore, which it dedicates to equity investing, and it uses that fund from it uses that fund to basically fund the institute's long-term goals of research and development. And these funds are basically an accumulation of alumni contributions and the different sources of income that the institute is having, and then basically investing into equities all across the globe. The 2 lakh crore that they have currently in the fund size. And I came across this fund really when I was researching about Antony Waste. So I have a personal holding in Antony Waste, and I had entered close to 1.5 to 2 years back when the price was around 300 to 400. And that's when I realized that MIT had an investment into Antony Waste, and MIT continues to be bullish on Antony Waste. And I have constantly talked about how waste management in America is a big part of a lot of super investors' portfolio. And it's a very interesting field to me. I think waste management because of the clear fact that 80% of India's waste is untreated. It's a problem that needs to be solved for. Antony Waste is working with close to 20 to 25 municipalities currently. Some of the big ones, it's working with some of the big ones. It's also working with BMC, and it has all the machinery and a deep moat within the business. So, because waste management, you have a very small sliver of people who can apply for the tender, and to really be eligible for the tender, to really win the tender, you need to be strong both financially and technically. So in those terms, there are very few companies which have the wherewithal to um, win those tenders or even apply for those tenders. And Antony Waste is one such company. And MIT has been very bullish and has been invested throughout the time where even I have been invested. So I'm disclosing right away that I am invested, and there's no this video is not a promotion of that particular stock, but it's just this video's objective is to look at some of the things that MIT is invested in and some of the things that it has increased its investment in, and some of the places where it has exited. And we're not going to talk about places where it has exited because it has huge number of holdings. So I'll be looking at it right now for the very first time, and the objective really is comes from a concept called cloning. Um, Now, there are many super investors in America who look at the 13F filings, 13F filings that are done in America, where the top investors disclose the stocks that they have entered or stocks that they have exited, and a lot of companies use this as a seed to then go on and do deep research and then start its investing activity. um, and this is kind of similar. So whatever I am putting it out is not a stock recommendation, and I would advise to please consult with your financial advisor or do your own independent research if you have the inclination to really go ahead and make all the purchasing or the investment decisions. So here, as I was telling you, like since COVID, MIT is invested into Antony Waste Management, and it had a 4.82% stake in December 2020. And as we can see that it has been increasing its stake. And here, December 2023, it's come down to 6.93% of the company. So the company size is close to 2,200 crore, and it owns close to 6 to 7%. And the way this holdings works is that once it goes below 1%, and it's so that cannot be tracked because that is not required to be published by companies. Only when a person's or an institution's holding goes above 1% is when the holdings need to be disclosed. And uh, in the case of Antony Waste Management, we can see that it's clearly bullish on Antony Waste Management. What it has done is it's also bullish on a lot of things that I am not particularly fond of. And really, I am looking at a fund who has a fund holding of close to 2 lakh crore and is invested all across the globe. So MIT, what really struck me was that it's invested into some of the even the smaller companies. So for example, if you look at this company called Calcom Vision, it's has a close to a 6.81% stake. And if you go deeper into Calcom Vision, we can see that Calcom Vision has a market cap of close to just 170 crore. So it really strikes me and it surprises me as to why it would go into such small market caps, but it does, and it's I think MIT doesn't function as a JP Morgan or one of the big um, investing houses where there are some set rules and there are some set parameters. The ROC needs to be above this much, ROE needs to be below this much, and so it's more experimental in nature. And maybe that's the fact that they've been doing quite well in terms of the returns that they've been generating. Um, so Antony Waste is another one that it has a holding on. Then again, Barbeque Nation is something it has a holding on. And now, if we quickly go through some of the numbers of Barbeque Nation, so a market cap of close to 2,500 crore, not a great return on equity or return on capital employed. So not really generating a lot of return on the amount of money that is being placed in the stock in the company. And as you can see, the profit after tax is sitting close to minus 12 crore. But still, FIIs are holding close to 17.5%. And they are very bullish on Barbeque Nation. So for all those who are not aware of what Barbeque Nation is, it's over the table barbecue. It has live grills embedded within the dining tables, and it has a eat all you can at a fixed price, and a significant presence in India's hospitality sector. It's one of the most visited and widely recognized restaurant brands. And really, I think the FIIs who hold 17% are betting on the future of Barbeque Nation. But I have a different view to this. I feel that this can get pretty crowded in very soon if more and more brands do come up. And we are already seeing a lot of alternative brands which are coming up, which are already undercutting Barbeque Nation. So the way capitalism really works is it hinges on the fact that a company will be able to make supernormal profits for a long term if it has a unique selling proposition. But if a company does not have a unique selling proposition, then that can be a problem. So really, barbecue businesses like Barbeque Nation, I do not see them having a unique selling proposition. And I feel that it might be any time that MIT may exit from Barbeque Nation. But so the basic premise of investing is really to be invested in something which makes supernormal profits, continues to make supernormal profits. And I was just looking at one of the interviews of Ramdev Agarwal, who's the co-founder of Motilal Oswal, that he looks at companies which are able to generate close to 25 to 30%, 30% ROE for the last 10 years. Because if a company is able to generate that kind of return on capital or that kind of return on equity for long periods of time, that means the company has a pricing power. And pricing power becomes really important, as we would see with a lot of super investors. Like if Warren Buffett has invested in Coca-Cola, he knows that marginal increase in prices will not impact the demand of Coca-Cola as much. He as much as goes on to say that if the world was struck by an asteroid tomorrow, and there were a couple of people remaining and they had Coca-Cola on them, they would be trading on Coca-Cola. And it has such a brand pull and it has such a brand power, is where I'm getting to. So that's what is happening with Barbeque Nation. I think it's a prospect that MIT is bullish on. But I really feel that it is something which does not have a deep moat within itself. Some of the other names that get talked about a lot is Dishman Carbogen. I haven't done deep research on Dishman Carbogen yet, but I'll quickly go through what I can see right now. I think if you look at the book value, is sitting at close to 359, and the price is sitting close to 184. So price to book, it looks quite attractive. But another company which ROC and ROE are not up to the mark, and MIT fund, this is what it demonstrates, that they have a team which hinges on not just the numbers, but also on the future potential. So Dishman Carbogen, as we can see, is engaged in contract research and manufacturing service and manufacturing supply of marketable molecules such as specialty chemicals, vitamins and chemicals, and disinfectants. Its business segments and revenue include CRAMS being contract research and manufacturing services. Companies in integrated CRAMS play with strong capabilities across the value chain. Um, and it has marketable molecules as 12% of the revenue. And so, yeah, this is not my area of expertise in terms of things that I understand or things that I would like to hold, because I also want to have some competitive edge. So if I hold something like this, for example, if some scientist holds something like this and he has some inclination towards investing, he will be able to do much better with this, because he can then look at some of the new information that is coming in, and then take calls as to uh, why something might do well or why something might not do that well. So that is something that needs to be kept in mind, that when you're investing, you need to have a competitive advantage. You need to either know about the business or have affinity. So for example, I find hotel business is very easy to understand. I find jewelry business is easy to understand. I'm not an expert, but I can build my forte through reading. That is something that excites me. Reading on it excites me. Defense sector is something that excites me. Credit rating is something that I understand. Banks is something that I do not, because I do not understand the NPA and the science behind it. So I tend to stay away from the things that I don't understand. IT is something I don't understand, so I tend to stay away from the things that I don't understand. Some of the other things that MIT fund is holding. So here you can see that Equitas Small Finance came with a lot of hope and a lot of announcements that, yeah, this is the next big thing, and MIT went in big on this and then continued to trim its position. Some of the other new things that it has gotten into. So Indian Energy Exchange is an interesting case. It entered into Indian Energy Exchange close to March of 2020, and it continued to hold through here 1.37%, and then it exited close to March of 2022. I think that's where the proposal of market coupling had come in, and then it kept a trim position and then went in big on this. Again, it went in big, but I think now again it'll start trimming its position, because market coupling news is again back in the horizon for Indian Energy Exchange. Now, Kaveri Seeds is also one of the big themes that MIT fund is betting on. And so we'll quickly have a look at what Kaveri Seeds business model is like. So market cap is close to 5,289 crore. Stock P is close to 16.8. Return on capital employed and return on equity is close to 21.8 and 20.3%. And Kaveri Seeds it is one of the largest seed companies in India, with a strong R&D base for developing quality hybrids in key Indian crops. It has 125 plus high quality hybrids and varieties developed across different segments of seeds. So basically, it's in the seeds business now. Quite interesting. This is a very unique business, and so we'll quickly have a look at some of the notes from the con call, and as to how Kaveri Seeds have been doing. So revenue from operation close to 808 crores, a net profit of 282 crore, growth of 6% year on year. Cash, it has a good amount of cash on its book, close to 605 crore. Whereas the market cap of the company is sitting close to 5,289 crores. So 10% of the market cap, close to around 10% of the market cap, it has as cash on its book. There has been significant growth in volumes and revenue for maize and rice. And agriculture output and agricultural quality is going to be a huge theme, I think, within India. And company like Kaveri Seeds, I can clearly see a case why MIT fund would be interested in it. Although I would need to do deeper research on this to really form my opinion. But right now, it looks like an interesting theme, but really, I cannot say much about other things related to Kaveri Seeds. Yeah. So let's look at some of the other things that KPIT technologies. Again, if I'm not wrong, this is related to cars. So global technology company with um, software solution. So mobility is making software defined vehicles, and KPIT really technologies is something which has really done well on the markets. So as you can see, close to October 2021 is sitting at close to 400, but right now it's sitting at almost 4x. So within a period of close to 3 years, it has made a 400 times return. And as you can see, return capital employed and return equities at very high levels, 40% and 41.2, 31.2%. So it provides the software related to automobiles, and basically the idea is to enable automotive and mobility ecosystem for making software defined vehicles. We'll quickly have a look at some of the clients that it has, and the geography split of the revenue. So 31% of the revenue really is coming from US, 52% in Europe, and 70% in Asia. So in terms of geographical distribution, it's well diversified. In terms of verticals as well, 77% is coming from passenger cars and 23% for commercial vehicles. So even in that manner, it's well diversified. But the one place is not diversified is industry wise. 85% of its revenues in FY24 came from just one industry, which is the automobile industry. And the nature of the business is such that it is bound to be coming from just one industry. Looking at some of the other things that matrimony.com. Now that is a really interesting piece, which I thought I should highlight. So InfoEdge has done really well. Sanjeev Bikhchandani, I think, the co-founder of InfoEdge, has also made some really smart investments into Policy Bazaar and Zomato and Blinkit and those kind of things, and he has done really well. Matrimony.com is the competitor of InfoEdge in terms of Jeevan Sathi being with the InfoEdge brand, whereas Matrimony.com is being a separate brand in itself. So here we can see that MIT fund is invested in Matrimony.com, and it's invested close to 9%. So if you have a look at the market cap, it's close to 1685 crore. And if you assume that almost 10%, so it has invested close to 168 to 170 crore into matrimony.com. So in terms of the return on capital employed and return on equity, 20.8 and 18.2% respectively. Stock PE is at 34.2. In terms of what the business is about, the business is about matchmaking services on internet and mobile platforms. The company delivers matchmaking services to users in India and the Indian diaspora through websites, mobile sites, and mobile apps. It is the number one online matchmaking position in India. As we know, how India's demography is shaped up. So a lot of people are under the age of 30, and are going to be hitting the marriageable age, and these platforms are going to be a big part of how people are looking for their life partner. So and as you can see, some of the NRIs also hinged onto this website. So export is close to 15%, India is 85%, matchmaking service is 98%, and marriage service is 2%. They're close to 10 lakh paid users. In terms of a deeper dive into projections and those kind of things, do let me know in the comment section if you would want to see a deeper dive into any of the companies that I mentioned here, or deep dive into matrimony.com. So if you quickly look at, I think Matrimony.com has a PE of close to 35, and the financials, if you quickly look at it, it has 500 crore worth of business on which it is doing an OPM percentage of 15%, which is quite average. Nothing to write home about, nothing to be gung ho about, because some of the good businesses that I've been looking at have a OPM percent of close to 50 to 60%. And really, if you want to build a margin of safety into your investments that you're making, I think one of the key factors to look at is the gap between the sales and the expenses, because a lot of times people are invested into heavy capex, heavy industries, and a lot of the profits is totally dependent on the raw material. So, for example, aviation industry. Although aviation industry has done quite well, and Interglobe has, in terms of price, has done quite well, but I just don't like the fact that profitability is hinged on how crude oil pricing is done, and jet fuels are kind of expensive and very volatile in nature, and profitability is very fluctuating in nature. Interglobe aviation is a different case altogether, because it's it holds close to 60 to 70% of the market and has done well, but um, a lot of businesses, they write 2,000, 3,000 crore worth of business, but they are barely able to make any profits. Swiggy is coming out with its IPO. It's constantly making losses, not even able to make profits, even during the time when it's standing in the queue for an IPO. And a lot of celebrities are going in and investing. Madhuri Dixit and Rahul Dravid, and a lot of people are going ahead and subscribing to those IPOs. So they must be in it for the trading of it, and to utilize the wave of frenzy behind IPOs. Yeah. So I think OPM percentage for matrimony.com is all right, not that great. Profit before tax is close to 65 crore or 479 crore worth of business that it's doing. If you look at its stock price, in the last 3 years, it's been at -8%. But I think MIT would really have a long-term view on this, in terms of over the next decade, more and more paid subscribers would be jumping onto matrimony.com. And so I can understand the rationale that they're betting on big volumes coming into this. So quite understandable. Yeah. Some of the other things that it holds or has freshly entered into will quickly. So NIIT Learning is another very interesting business that MIT has. So this is basically training services. NIIT Learning Systems offers training services to companies across 30 countries. The NLCSL, which is the NIIT Learning Systems Limited, has comprehensive suite of managed training services, which includes custom content and curriculum design, learning delivery and learning administration, L&D activities. So basically, it offers managed training services to Fortune 1000 and Global 500 corporations across North America and Europe. And it is armed with necessary capital to take advantage of opportunities opening up, particularly in the learning outsourcing market. Interesting. So the ROC and ROE is very high on NIIT Learnings. The stock PE also looks reasonable at around 31.3, and the dividend yield is also close to 1.02%. So in terms of price to book, it's sitting at close to 7 price to book, and the free cash flow 3-year average was close to 602 crore. In terms of how the prices have done, it was sitting close to 360 crore in September 2023, and currently sitting at 360 rupees in September of 2023, and currently sitting at close to 515 rupees at the current times. Promoter holding is around 34 to 35%, so not a major chunk with the promoters. And yeah, so if you look at the profit and loss statement, I think the sales is sitting at close to 1578 crore, on which the OPM is 24%, and the profit before tax is sitting at close to 310. I think there are a lot more companies to go through. We can, I think, pick it up in the second part. I will close this part out for now, and I hope you have a great day ahead. Thank you. Bye-bye.